Let's be clear, Bitcoin is an international asset.
We are spending like drunken sailors.
Bitcoin is the only economic entity where the supply is unaffected by the demand.
If you want to preserve your wealth, you have to convert that currency into an asset that's scarce, desirable, portable, durable, and maintainable.
All right, welcome back to Scarce Assets. Excited for this week's episode. I'm joined by my co-hosts Tim Kotzman and Glenn Cameron, and we are joined by Matt Cole. Matt's the CEO of Strive and the Chief Investment Officer of Strive Asset Management. Before getting to Matt, just real quick, Scarce Assets, for those who've been haven't tuned in before, it's a biweekly podcast, and so we're dedicating this podcast to exploring the investment landscape shaped by the paradigm of scarcity as the ultimate driver of value. And so as traditional investments struggle to provide real returns and fiat currencies lose their appeal to debasement, our show provides a forward-looking lens on how investors can preserve and grow their wealth in the 21st century. So Matt, you're a great guest for the show because before we hit record, we were talking a little bit about your background as a fixed income portfolio manager at CalPERS. Could we talk a bit about that? Could we go into some of the detail that, we just touched the high level, but if you could share a bit about your history at CalPERS, what it was like to manage a fixed income portfolio, and then we could get into how did Bitcoin kind of fit into that worldview that you had, and how did that all shake out for you?
Yeah, well, first, thanks for having me, guys. This is going to be a really fun conversation, and I've spoken a lot over the last couple of years about my background at CalPERS with regards to issues with ESG and DEI. That was part of the day one mission and focus point of Strive, but less so, but more so recently about Bitcoin specifically. And it's really an important part of my journey because this was actually part of my journey even before the ESG and DEI stuff, Bitcoin specifically, and some of these more macro issues. And it ties back to even why I started my career at CalPERS. So I started as an intern in 2006 as I was trying to figure out what I wanted to do for my career. And while I was an intern, the great financial crisis happened. And that great financial crisis obviously caused issues all throughout the world. And pensions were hit specifically hard. And they were hit hard in the sense that they became underfunded for the first time. And so for me, that was a very personal thing because my parents, my grandparents, my uncle, they all had their pension tied to CalPERS specifically. And CalPERS didn't have enough money to pay out to pensioners. So I'm looking at that problem. I'm looking at an exploding debt crisis in the globe, but also in America. And I wanted to help fix that problem. And so I decided to join CalPERS instead of doing things like go to Wall Street, go to New York, because there was a personal mission to me to try to help fix this problem at CalPERS. Interestingly, my first job was in fixed income markets. I was doing agency mortgage trading. I was mainly focused on agency mortgages, structured products, which, by the way, later on, structured products will be interesting. It ties a lot to actually Bitcoin bonds and some of that kind of stuff, but structured products, and then eventually U.S. Treasuries. Worked my way up to be their youngest portfolio manager, their top performing portfolio manager, and was managing about $70 billion. Their fund was about $500 billion at the time. So think about it as managing about $1 in every $6 for CalPERS. But specifically those assets that I was managing, specifically the U.S. Treasuries, you're looking at the debt crisis in America every single day. You're looking at the printing of money, which was interesting because in the institutional context, there was a debate of if it was printing money or not printing money. My view was always it was printing money, and it was obvious. But when you talk to people at the Fed, there was arguments about why it wasn't printing money. But they're printing money, and they're debasing their currency at a rate of over 6% per year on average since the great financial crisis. And if you are a reader or a fan of Milton Friedman's work, you'll see that printing money is inflation. Whether or not it increases the price of eggs, my argument will be that because of the specific way that they were printing money through QE, the inflation most obviously manifested itself in financial assets, whether it was housing, stock, the prices of equities, but it's something that everyone, and specifically people that didn't have exposure to those assets like millennials, felt. And so we were all really aware of the problem, thinking about that problem every day. and there was not an obvious solution to that problem. And so while I was there, call it in the early 2010s, I started following Bitcoin, but I was not buying Bitcoin. In fact, I thought it was a scam. And I had a very institutional mindset to Bitcoin that I'm managing billions and billions of dollars of I know the institutions know what's going on. I don't know what all these kids are using Bitcoin for. It's going to collapse. It's a scam. So that was my early viewpoint of Bitcoin. Call it in 2010 through most of 2015 into 2016 was just that this thing's going to collapse. But I was watching it. And I was well aware of the problems that Bitcoin theoretically should fix. In mid 2016, I had an awakening around Bitcoin, and it was really because my thesis around it collapsing kept not being true. And so I humbled myself, and it wasn't to say that I believed in Bitcoin at the time, but that I'm clearly missing something if I think something's going to collapse and it keeps not collapsing. So I went deep down the Bitcoin rabbit hole in mid to late 2016, just forced myself to integrate within the Bitcoin community, ask questions, understand stuff like this, and challenge my assumptions, because as investors, we're always going to be wrong at times. And I think people that end up being the best investors are willing to humble themselves when they're wrong and question. So I went deep down the rabbit hole and became a Bitcoiner myself in very late 2016, early 2017. And since then, have just been a big fan, put my personal portfolio on the Bitcoin standard, and off to the races from there.
So can I ask a follow-up question, which is, so you mentioned DEI and ESG in there, right? And that was like kind of a big focus at CalPERS. Obviously, at Strive, we've taken a pretty forceful and high conviction position on all of that kind of stuff. So I wanted to ask you what it was like working at CalPERS in that respect, but also whether you see a connection between these things, like the monetary debasement. I mean, obviously, treasuries and dollars are probably the least scarce thing around. I mean, I'm just wondering if this sort of, this sort of social engineering and the money, if you see any kind of connections there or something like that, and what your position and all that is.
Mm-hmm. I do think that there is some connection between ESG, DEI, and Bitcoin, and the connection that I would draw is there's really two very different mindsets of the future of the world, and one of them ties back to control, and the other ties back to freedom. And so my view is that the ESG mindset, the stakeholder capitalism mindset, the blockchain, not Bitcoin mindset, CBDC mindset, all those things tie back to control. That and I know a lot of people that fall into that mindset, that they are often well-meaning people, but their well-meaningness, I think, actually falls back into something that I think is they think that they and the managerial class know what the world needs better than the average person. They want to control that, and they want to help that in their way to help humans do better in the future, but it's extremely misguided. And I completely disagree with it. Fight back against it in every way, but I think that's what goes in the mindset of all of these different things. Think about ESG and what ESG was and is. It's the forcing in of certain values across government, across corporations, to everyday citizens, a forced implementation. And that forced implementation, we're not even talking right now of if those values are good or bad. I think they're bad, but like that, you could take the other side. But I think what's not debatable is that it was the forcing in of values into and across corporations and corporate America. And I think CBDCs would be the exact same. Bitcoin, and where I think it does tie in, and it was interesting. So, later on in my journey at CalPERS, as I was talking about Bitcoin there all the time as the young portfolio manager, top performing portfolio manager that also happened to love Bitcoin and, thought it was crazy. Eventually, I think they realized that they don't understand it. So they asked me to help teach. So, part of the teaching was looking for how to implement it on an asset allocation side. Another part of it was I hosted some fireside chats where I would bring in industry experts and we would have a conversation with me and this person, kind of like what we're having right now, but just internally, right, with the entire investment staff. My first conversation, I actually brought in Ryan Selkis when he was still the CEO of Masari. And so we started talking about Bitcoin, and I thought it would be fun because, I'm obviously was different minded than a lot of them to actually position, which I really believe is true, that Bitcoin should be the ultimate ESG asset. If ESG is actually first principle based and not a forcing in of certain values into corporations. So I said, hey, let's actually dissect this on ESG. What does Bitcoin mean? And why Bitcoin shouldn't be anti-ESG, but it should actually be pro-ESG if we're being honest about what ESG should be. So we talked about that, but obviously in ESG circles, Bitcoin has not been, even though Bitcoin's a mechanism to actually force clean energy. You think about what's gone on in Texas, where flaring of gas has been able to be utilized versus just spit out into the universe as an emission, utilized to mine Bitcoin. Well, that's actually really good for the environment, but doesn't get counted in ESG circles, right? If you think about S, the democratization of a scarce asset and the ability to transact freely with Bitcoin, that is really meaningful, especially in emerging economies, right? Less so than developed economies. That's a really meaningful thing, yet it doesn't get any points on S. You think about governance, well, there's, in my view, no better governance mechanism than how Bitcoin operates in its decentralized manner, but yet it's not positioned that way. And so I do think it all ties back to this same fundamental viewpoint differences. And I think it's why you've seen the current administration in the United States take a very positive stance to Bitcoin. I don't think it's from the perspective of they want Bitcoin to replace the dollar, or I think there's still in both sides of politics, I think a lack of acceptance of where things are going and what that likely means for the dollar over the long run. And I'm always positioning myself as someone that's America first, not dollar first. And I think that ties back to my view on Bitcoin and how the government should adopt Bitcoin, but at least not killing it and deregulating and allowing it to compete is something that we're going to see. We are seeing at the governmental level.
Yeah. Yeah, very well said, Matt. I'm excited to dig in a bit more into the ESG learnings about how Strive is taking an approach to advocating for Bitcoin within corporate treasuries as a shareholder. One thing I want to go back to, just because I didn't know your full backstory about the motivations to join CalPERS, and I think that's commendable that you saw a problem that affected you personally and your family, and then, of course, millions of people, tens of millions of people within the state of California. What are your thoughts now, zooming up to 2025? We're starting to see just a few basis point allocations at some of these state pensions within the Bitcoin ETFs. It seems like that might be part of the due diligence of just getting up to speed on the asset class before really legging in with a more substantial allocation size. But I guess that problem that you saw with the underfunded pensions that still persists today, and perhaps it's gotten worse. You could tell us. I'm not entirely sure, but how does Bitcoin kind of fit into this objective that you initially set out on your career?
Yeah. So first, taking a look at the pension crisis in this country, you would think that post Great Financial Crisis, we've had over a decade, call it 15 to 17 years of pretty good returns. You would say the problem probably has gotten better. It hasn't. It's stagnated. And what's happening is that baby boomers are starting to retire, which kind of starts this pension doom loop, and they haven't been able to actually substantially increase their funded ratios after they dropped in the Great Financial Crisis. So I think you're seeing this problem play out in real time, and I think it unfortunately likely ends in a pretty negative way, and I'm very concerned about it still to this day. With regards to Bitcoin and institutions and pensions, one of the things that I think is unfortunate about the institutional investment community, I think it's also similar in corporate America, is the lack of ability for most of these managers to move outside of a consensus. So I think there's really an afraidness to be the first mover or the first movers. And so I think that's why you're seeing a few basis points here, a few basis points there. I think that they'll likely move in kind of a pack, that once you start to see more people implement it, adopt it, that you'll see kind of a mass adoption in a relatively short period. And I have some thoughts on how I think it likely plays out, but I don't have complete conviction in that. But one of the things that I think will likely play out is if you think about pensions and how they often allocate to other commodity or real assets. And I'll use commercial mortgages as an example. Most pensions, you think about a commercial building and taking risk on it, they'll typically buy the AAA rated securities of that commercial mortgage. So you'll think about whatever some Class A property in New York that they might buy. They're not taking the full risk of a default on that loan. They're taking the AAA tranche, which means that it's typically protected. Call it 30 to 40% of the downside losses. They don't even, and that's for a commercial mortgage. That's where institutional buyers concentrate. And then those commercial mortgages are sliced and diced, and hedge funds or other types of buyers might buy the more risky tranches of those types of securities. It makes sense when you think about a volatile asset like Bitcoin, or even like a full Bitcoin treasury or Bitcoin standard company like a MicroStrategy, for institutions to be more interested in the quote unquote safer version of that, while they might still want access to it. So I think the idea of slicing and dicing Bitcoin and creating structured securities makes a lot of sense for something that an institution would likely actually have more interest in. And I think that would give them the comfort to move more in scale. And I think for the Bitcoin community and Bitcoin bulls, those more risky assets, I think, would be very interesting, because if their Bitcoin bull thesis plays out, then you're able to get levered exposure to Bitcoin.
Yeah.
That's fascinating, Matt. Yeah, could you won't hold anything against you, if it doesn't play out as expected. But I'm curious, so in these pension portfolios, then what do you surmise might happen between, let's say, spot ETF exposure, which just vanilla exposure to Bitcoin, versus some of these structured products, whether it's, I guess in this case, more so protecting the downside, but I'd imagine some investors, perhaps not pension funds, may want to participate in more of the upside. What are your thoughts there in terms of portfolio construction?
Yeah, I think small to medium-sized pensions, smaller states, probably more red-leaning states that tend to agree with the worldview of people that would like Bitcoin would be more likely to buy Bitcoin ETFs. And I think that's what you're seeing in practice. When you look at a pension like a CalPERS or a New York pension fund, if they were to buy Bitcoin, I think it's way more likely to be in structured form with downside protection. And I do agree with you. I think that today there would be a massive amount of demand for the more risky version of tranched Bitcoin in the Bitcoin community. I would probably be a buyer of that myself. And I think that there's likely demand for pensions and less risky for the safer version. I think that happens. And this gets into kind of some of the conversations of Bitcoin bonds and structuring and all this stuff. I think what will ultimately scale best is something that is bespoke, that you can't just put together on its own. So let's say, as an example, the idea of taking a US Treasury debt, sprinkling in a little bit of Bitcoin and combining that to someone. Well, I could actually just do that myself. I could buy a Treasury, I could buy a little bit of Bitcoin, and I could replicate that. I don't need them together to do that. So if that's all it is, I don't think, I mean, I could be wrong. I don't think that scales or would be interesting to an institution. but something that they cannot get access to absent for that security. I think that also provides them interesting exposure and beta to Bitcoin, I think.
Yeah. I wanted to go back to something which is, you were talking about the underfunded pension schemes and the reasons for joining CalPERS and stuff like that. And I know if you go to like an RIA for advice or something like that, or a wealth manager or whatever, essentially they'll take into account on your side of the pond social security. On this side of the pond, they'll take account of what we call the state pension, which is the British equivalent. And so it's super interesting because the US government debt is about £3 trillion. I mean, it's obviously a different size economy. It's about 108% of GDP. And but then they've got all these they're meant to be state-funded pensions for like the National Health Service, for the firemen, all of this kind of stuff, but they don't have a dime put away, right? And they're all defined benefit pension schemes, and they owe like $2.5 trillion on those. And then they owe about another $5 trillion on the state pension. Like if you calculate the present value of the liabilities of these things, right? So, and in the US, the numbers are, comparable, like 6-7 times the explicit debt. And so it seems that either you're going to get your social security or state pension, but it's going to be kind of a debased version of it, right? Or at some point they're going to have to go, listen, sorry, after this date, nobody's getting it anymore. And then everybody's financial plans have been kind of done around the fact that, oh, I'm getting this payment on a monthly basis when I retire, and I'm going to be short, right? So I was just wondering if you see like how Bitcoin potentially kind of comes into that picture and how it kind of solves that issue.
Yeah, entitlements are super interesting in specifically in the United States. So if you've been following Doge and all these things about reducing spending in the United States, which I'm a huge fan of, I think that entitlements are something that's still a sacred cow that people are not willing to touch on either side of the political aisle. And even when you look at government spending in the United States and you compare pre-COVID to now, and I think there's been some people talking about, well, if we could only go back to 2019 levels of spending, then we actually have the tax receipts, we can balance the budget. Well, the dirty little secret in that is that, yes, there's been some increases of spending for silly things, but most of that's actually entitlements like Social Security and Medicare in the United States. And it's because baby boomers are retiring. And so unless you're willing to touch entitlements, there is no going back just by slashing a few agencies, which needs to happen. But that's not going to go back to that amount of money. So what happens? Do you gate the flows of entitlements to people, or do you just print money and increase the debt and keep paying it? I think there's what I would like to be true, and then there's what I think happens, and those are often two different things, right? And so as an investor, I always invest on what I think happens, not what I think should happen. And my prediction is that the kick the can down the road mindset continues when it comes to entitlements in most countries, because it's the most comfortable thing to do, and the can gets kicked until something breaks. I wish that wasn't the case, but I just don't see how that's not the case. And so if that's the case, then okay, Social Security becomes insolvent in a few years from now. We increase the levels of debt for some reason to keep funding it. My guess would be other countries do a similar type sort of thing. And ultimately, it's going to continue to fuel people, young and old, specifically younger people, that see this problem as their parents are getting paid Social Security from an insolvent fund, to things like Bitcoin. And interestingly, Bitcoin in so many ways has been a great asset. But one of the things that's been particularly great about it, in my view, is that smaller people, smaller organizations are able to move before larger ones. So I think it gives power back to the people in a major, major way. And I think that will likely continue. And I think individual adoption of Bitcoin will continue to front run institutions. I think that institutions are going to start getting involved more and more, and the ones that are able to humble themselves will do the best over the long run. But I think that it will be a massive tailwind that continues for Bitcoin adoption.
At Onramp, we believe that Bitcoin is the most important asset of the 21st century. The hard part is securing it right. There are shortcomings with keeping your coins on an exchange, but also with setting up your own self-custody arrangement. Onramp solves for these concerns. Our multi-institution custody solution maximizes security and minimizes counterparty risk, ensuring that your Bitcoin remains securely in your possession, and provides built-in inheritance planning to ensure your family is protected as well. Onramp provides peace of mind for your Bitcoin journey, whether for your whole stack or for part of it as a complement to your existing self-custody setup. For more information, check us out at onrampbitcoin.com.
It's well put, and this ties into, Glenn, both your question and Matt, your response. One thing that concerns me is exactly what you laid out, right? That we have a massive entitlement problem. The most likely scenario is that the government, the central bank, creates more currency to fund these entitlements, which leads to decreased purchasing power, which ultimately the main concerning thing here is that retirees don't actually have the ability to retire, right? 10 years into their retirement, they don't have money to live for another 10, 15, 20 years. One thing that I want to drive toward that concerns me is, well, we all understand individually, and most of our listeners probably understand the merits of Bitcoin at an individual level, but adoption is still so marginal, material adoption, right? Like you see these statistics of how many people have crypto or Bitcoin wallets, but not that many people actually have material exposure, call it like 5, 10, 20, 50% of their net worth in Bitcoin. Not to say that 50% is the right answer, but you get where I'm going with this. So what could states or the federal government or other, institutions do to adopt Bitcoin on behalf of their constituents? Do you think that that's part of what we see here with legislation at the state level? Because ultimately you can't get every individual forcefully to buy Bitcoin, but maybe these institutions start to adopt it on their behalf to, see the writing on the wall for these issues.
Yeah, and the conversation around states is really interesting, and on multiple dimensions. So several states in the United States have bills to adopt stockpiles or reserves of Bitcoin, and that makes a lot of sense to me. I think that the federal government should adopt Bitcoin and a massive Bitcoin stockpile, but I think that's harder. Where a state can, I think, really credibly say that our stockpile of Bitcoin is a check on a federal government that's spending in a reckless way, that we can protect ourselves. And that, as just a concept, is the same concept of why the individuals, even though obviously not every individual, but individuals have moved before corporations or institutions, right? You see it because they can identify with the problem in a much more tangible way. And so I think that, I'm sure that a lot of these bills will not pass. I think some of them will pass, and there's pretty big support from major names. I mean, Vivek, who's likely to be running for governor of Ohio, has come out in support of Ohio owning Bitcoin, and I think he sees that problem, and I know that in Texas, where I live, some of the leaders have also come out in support of this, and it makes a lot of sense to me, and it does protect their constituents. And like, as an American citizen, people are America first. I think people tend to think that they're going to put first the things that are closest to them, right? Like my family is first before, for myself, before my state or my nation, but all those things are first, and my nation's first before the world. It's not to say that you don't care about those things, right? You care about those things, but there's a priority of people's individual responsibilities that tend to move closer to the individual. And I think that leads to things like states adopting more nations, and then within nations, likely more developing nations moving before developed nations. But for the United States, I always come back to, how would you feel if the United States and there was an announcement that China was acquiring billions and billions of dollars of Bitcoin? How would you feel if you're now following behind that versus doing that? I think as a nation, we have the ability to lead, but that conversation is sometimes challenging, even with people that are allies. And all of us are trying to push that in the right direction. But I think sometimes it's easier to go a bit smaller, like states.
Yeah. And so if we go in the other direction, somewhere between individuals and, say, states or nation states, we've got corporations, right? And I know you were involved in the vote that Microsoft took about whether to take a position in Bitcoin on the Microsoft balance sheet. And it was less than 1% of the shareholders that voted for that proposal. And I'm guessing you were on the side that voted for it. And because you were directly involved in it, it'd be super interesting to hear, what went on there and any insights you can share with us.
Yeah. So that was the first vote that Strive did with regards to Bitcoin treasury strategies at companies. And it was a no-brainer for us to support it. We did not expect it to pass. I thought it was actually going to get more than 1% support, but that shows you where we are as a movement with regards to large asset managers. But there was a lot of positive learnings for that from our perspective. One, Strive was just founded a couple years ago. Our first fight was ESG and DEI. And when you looked at some of those proposals, they often would get very similar levels of support. 1%, 2%, less than 5% support. Fail overwhelmingly. Every single large asset manager voting against it, the board recommending to vote against it or for it, whatever. And if you were on the side of pro-capitalism or pro-meritocracy, you were kind of out in the aisle. This was very similar. So with regards to why, and I think then it gets interesting of like, what is Strive going to do to help push this forward in corporate America, which we have, we started talking about a strategy there. There's different companies. Our view is that at least one company in every single sector of America should put themselves on the Bitcoin standard. Ultimately, I think every company should, but the first company in every sector, I think, is going to put themselves in a very leading position to maximize returns for shareholders while still in pursuit of their corporate mission over the long run. And you look at a company like Microsoft. Microsoft is a cash cow. And so they're extremely profitable. They're sitting on a ton of cash. They're, rightfully, they're sending off dividends. They're doing massive stock buybacks. And you think about, how do you maximize return to shareholders while in pursuit of your mission with this cash? It makes so much sense to me that they should acquire a massive stockpile of it. And you think about all these different things that are happening. There's massive AI innovation. Microsoft's going to be leading in actually helping do that AI work and investing in AI companies like OpenAI, ChatGPT. But there's actually a big risk for Microsoft that as AI disrupts, that smaller companies might be the beneficiary of that AI more than larger companies, that the moats that these large companies might have might decrease. Okay? That's a huge risk. I think it's a material risk factor to every single large company out there. And I think this kind of goes back similar to how Bitcoin is, in my view, a great power enhancer to the individual over the institution. I think AI is going to be a great power enhancer to the individual, to the small corporation over the large corporation, over the large state, the large nation state. So if you believe that in your Microsoft, how do you guard against that? You acquire a massive stockpile of the thing that's likely to benefit that you can invest in with your cash. It's Bitcoin. And if you buy that Bitcoin, well, then if that plays out, you can leverage that Bitcoin in the future to acquire or merge with the winners that maybe, reduce your moat that you have, and you reduce that substantial risk. And also you increase the return to shareholders in a substantial way, more than owning cash and sitting in a short-term treasuries, which, by the way, have a negative real interest rate. So they're losing their purchasing power on that. And that kind of gets into part of this, is that there's been a lack of a savings vehicle in the world that there is nothing that you can park your cash in that does not have risk, that doesn't just lose real purchasing power every single year. And Bitcoin restores, in my view, a savings vehicle. If you have a savings vehicle in an era that's going to have massive disruption, then one of the types of companies that makes the most sense to adopt Bitcoin are companies that have a lot of cash, like Microsoft. And there's other companies for different reasons that I think make interesting candidates as well, but they make a great candidate. And so we voted yes, and I hope that they end up adopting it, although obviously they don't appear to be doing so in the short run.
You know what I was wondering about that situation, because obviously BlackRock's taken a position on Bitcoin, with the ETF, with Larry Fink, with all the things they've said and whatever. And if you look at the sort of shareholder list of most companies out there, they've got BlackRock kind of got the proxy vote on a substantial portion of the shares. And I imagine it would be the same with Microsoft. I haven't checked. So that alone, you would have thought that they would have voted for that if they truly understand Bitcoin. But obviously they didn't, because less than 1% of the vote was a yes. So do you have any thoughts there? I'm just sort of curious.
Yeah. So like any large organization, BlackRock has employees that are true Bitcoiners. I know some of them that are there, but at the executive level, I don't think they understand Bitcoin even to this date. And I think that they view Bitcoin more as something that should generate revenue and generate interest in their firm, rather than something that they organically believe in and want to push out in America. Because if they do, they would have voted for a proposal like this. Even when you see things like their research reports about adopting Bitcoin, words really matter in there. And the words in things like that are such that if your client wants Bitcoin, here's how to do it in a smart way. Not, we think your clients should own Bitcoin or Bitcoin belongs. That's a very different viewpoint of Bitcoin. And so they're obviously providing, an ETF that provides access at a very reasonable fee. They're helping financialize, Bitcoin. But even if you go back to, some of their previous comments, even before, about the use case of Bitcoin, I don't think that they're true believers at that level. And I think that will filter through, and hopefully we can convince them and they can start supporting Bitcoin treasury companies. But I think that'll be a big signal, right? If you actually believe in Bitcoin and what it solves, why would you not support some of these initiatives?
Yeah. Tim, curious to hear your thoughts on that too, just with the Bitcoin Treasuries podcast. If there's anything you want to go more in depth there.
Yeah, Matt, I was curious if you kind of called this the year of the Bitcoin Treasury Company. Are there any companies or segments or industries that you think are most likely to lead the shift, or is it kind of all up for grabs?
Yeah, I think it's going to play out in a few different ways. I think you're going to see a handful of companies that will go public in various mechanisms as Bitcoin treasury companies. And I also think that you're going to see some adoption in public companies already to put themselves on the Bitcoin standard to buy Bitcoin. And what's going to happen, in my view, is that as those companies do it and as there's success, it's going to fuel more companies to want it. And so you're seeing this. I know a handful of companies that are considering things in this regard and really learning from the MicroStrategy playbook, because it hasn't been very long since they've done this. And I think that's something to everyone to remind themselves, that it feels like it's a long time, but it hasn't been very long. And they've done it very successfully. They're going to always be the blue cap of large cap company of Bitcoin treasury companies. But when you think about corporate strategy, there's just too many issues with the dollar that I just think that there's, you look at it as an example, GameStop came out and they talked about they're considering doing it. I actually have some pretty big concerns with some of the things that I saw. about crypto, not Bitcoin. And I think that for them, there's there's an opportunity to really do this right, and to take the blessing that they have that they're a meme stock that's highly traded and become not a meme in the future. Like, they actually have that opportunity, and they're blessed that they have a very high volume stock that people have interest in and watch, even though their business is completely failing. That's something that failing businesses would wish they could have. And I hope they don't fumble the bag. I mean, their stock is in some of our ETFs, so our clients have exposure to GameStop. So I'm like actually personally concerned with them getting this right. But I think that they're moving in that direction, right? And I think I think that's for companies that for whatever reason have a lot of cash, are able to implement a Bitcoin treasury strategy. There makes a lot of sense. Another sector, just to throw out a sector that I think is interesting, is the biotech sector. So in the biotech sector, companies that might start having trouble with drugs and getting them approved, they'll often trade literally below the value of their cash. They'll have a bunch of cash on their balance sheet, and their company is worth less than their cash. And their pipeline of product development is struggling, and there's not really a future for these companies. Well, man, put some of that cash in Bitcoin, and not just to have the pop of because you're a Bitcoin company, but actually to say, okay, our pipeline of medical development is not great right now. We can either keep burning cash, or we can get a Bitcoin stockpile and then take some of the time pressure off and say, we're going to actually just step back, think opportunistically, wait for projects that we think could beat a Bitcoin hurdle rate. And then you give yourself time while you're still in pursuit of your mission. It's not about every company in America stopping even thinking about being a company and just buying Bitcoin. You know, it's actually about buying time and being able to flourish and maximize returns over the long run.
Yeah. I was going to say, so we've kind of spoken about pension schemes, we've spoken about individuals, nation states, corporations. I guess every investor's got a slightly different kind of set of investment objectives, different risk tolerance, different income drawdown or whatever. So if we just kind of think about, like, how does Bitcoin fit into portfolio construction? Do you have any sort of thoughts for those kind of different cohorts? Like, for example, if you've got like a company, like a biotech company, and they're sitting a whole bunch of cash, right? They're gonna need a certain amount of money for operations and stuff like that. How do you think about, like, how much should go into Bitcoin? You know, if that's on the table, you know, or other types of investors. Go where you like with that question. Yeah.
Yeah. For corporations that are, I actually tie this back to AI. That my view is AI is going to disrupt the country and commerce and corporations to such a large degree. And this concept that 100 years of innovation is going to happen in 2 years. I think that you can't underestimate what that means. And so it leads me to corporations that can get their boards to yes, that actually understand Bitcoin. And I think that's one of the largest constraints to adoption is CEOs and boards that just don't understand it. If you don't understand an asset, you can't put your entire cash balance in that asset and actually hold it with conviction. Like you just right? I wish you could, but you can't. So you got to understand the asset. If you do, then the maximum amount of Bitcoin that you possibly could buy, I think, is the right answer. That's for corporations. So for corporations like biotech companies that are sitting on a bunch of cash and they're spewing money without good prospects, I think they should literally shut down as much of the operations that they can as possible and put as much of their cash into Bitcoin as possible. And then continue to try to buy more Bitcoin, acquire a war chest for deployment. For companies that are massively profitable, more like the Mag 7 type sort of companies, I think for them, they should less so just like shut down their operations, but leverage their large amount of cash discontinue things like stock buybacks and use that cash to buy more Bitcoin, potentially issue some ATM, shares to buy more Bitcoin while continuing to operate their core businesses because they're profitable, and invest where they think they have conviction that their investments won't be massively disrupted by AI and beat a Bitcoin hurdle rate. But that's very different than what a biotech company or a company like GameStop would look like. And I think every industry is going to have a very different answer. I mean, there's many industries that I think the hurdle rate for capital deployment has gone too low. It's gone too low because of this lack of a savings vehicle. And so for some of those companies, I mean, the answer might be shut down a substantial part of your operations, but not to just do that forever, but to do that in pursuit of a longer term strategy. Lastly, for the individual, so on our wealth side of the business, we recommend a 3 to 5% allocation to Bitcoin. And that allocation is actually constrained versus if you were just to do a pure total return, efficient frontier analysis, like how much could you put into Bitcoin without, while still maximizing risk-adjusted returns. But our view is that you constrain that because if people aren't educated and have conviction and understand Bitcoin, they won't be able to handle the volatility at higher levels. So getting them some exposure, and then to me, it comes back to the actual individual client. The more educated and the more conviction that they have, and we obviously try to help them with that, the higher amount of Bitcoin that they can hold, and not to basically demand that it gets sold at any time because of volatility. That's a huge risk of actually putting Bitcoin into whether it's a corporation or individual's balance sheet when they don't understand it or they view it as a get rich quick scheme versus something that's going to enhance returns and provide a lot of benefits against different risks over the long run.
Yeah, I love that you mentioned education just because it is so critical. Whether it's a corporate boardroom and trying to educate on the merits of it, or you're on the private wealth side working with individual clients, I don't think there's enough education out there yet. And then obviously we focus on a lot at OnRamp, and as you do at Strive as well. One of the things that's challenging is the volatility aspect that you mentioned, Matt, just because the traditional assets that investors allocate to have negative skew. They have more downside volatility than upside. So naturally, as investors, we then anchor to volatility inherently being bad. Whereas Bitcoin, and I believe gold as well, has a positive skew. There's more positive volatility, so up days than down. And so I agree with you that education is critical. And as part of that educational effort, I wanted to hear about what you've mentioned a couple times on this call now, and you've been tweeting about, is the Bitcoin hurdle rate. Is that a component of education on the corporate side or on the individual side? How do you kind of think about that as an individual, but then also as part of the business?
Yeah, absolutely. And this gets into actually a very hard question. Okay, Bitcoin's the hurdle rate. What does that mean? And what is the percentage hurdle rate, right? And we're doing a lot of work on that right now and expect to have some research that comes out over the coming months. But I think if you start with the problem, and the problem that the current hurdle rate of cash creates a broken hurdle rate and a broken system because the real interest rate is negative. There is not a savings vehicle. And so when you plug that into whether it's a DCF type sort of model or whatever type sort of model you have, negative interest rates break almost every single model that's out there. Okay, so you have broken models today. Those broken models create weird financialization schemes that are going on, like stock buybacks or whatever you might see, things that typically you wouldn't see exist because it's kind of a hot potato of cash is bad and you want to move away from it. Bitcoin is a true savings vehicle, and so the reintroduction of a true savings vehicle means that a true savings vehicle should be a hurdle rate. Now, what does that mean? You look at Bitcoin's returns over the last 10 years, 5 years. I believe over the last 10 years, it's about 80% a year. Over the last 5 years, it's about 60% a year. I think that there can be different viewpoints of what the future return rate of Bitcoin is. I think it could be somewhere between 20 to 40%, depending on your view of the world. I think Saylor pegs it around 29%. Kathy Wood, I think, pegs it around 40%. You discount it a bit, but something that is at a minimum 20% over the next 10 years. So I think that would be a very conservative hurdle rate that if you say, okay, if I can't beat 20%, why am I putting my capital to work to something? And you look at the IRRs that are typically required for CapEx in America, and it's typically around 10 to 12% is the average return on capital for CapEx expenditures. Well, that seems very risky to me to try to earn 10 to 12% right where in the beginning moments of an AI exponential innovation move. That seems very risky. Why would I not prefer to put myself and acquire a massive stockpile of Bitcoin to strategically deploy over the long run? I think that's going to be a much less risky strategy. And so it's more of the macro viewpoint of Bitcoin, thinking about a true savings vehicle and questioning whether the current use cases of capital have been good or bad for the company versus owning Bitcoin. And I think when you look at what they've done, I think it's easy to say that even if you discount Bitcoin's future returns heavily, that Bitcoin as a hurdle rate Bitcoin is likely a better asset than what a lot of corporate actions have been doing.
Yeah, it's fascinating. What do you think of the timeline for this, Matt? Because you mentioned earlier in the conversation that DEI ESG was unpopular when Strive became a proponent against it. And that was, I don't know, you correct me if I'm wrong, like 3 or 4 years ago, maybe. And then of course, yeah, perfect. So, and then of course that's become a center of political debate and discussion, and ultimately I think contributed to the Trump administration and their campaign and success was that Americans were particularly fed up with this model of ESG and DEI. And so now we're saying things that are typically unpopular and probably very minimally discussed, right? Not only in the US, but also in the world, as this idea of Bitcoin as a hurdle rate. What do you think like 2 or 3 or 4 years from now looks like in terms of the discourse there? Do you think we'll see material interest and appreciation for that mental model?
And let me add to that question a little, right? Because you are CEO of an asset management business, but you're also the CEO of the enterprise business, and there's a wealth management arm and stuff. So you must have some kind of feel for, because obviously we've had a president, we've got states talking about Bitcoin, it's kind of in the news all the time. So as well as what Jackson's asking, what are you actually seeing at the moment, like from your client base?
Yeah, so maybe start with corporate adoption of Bitcoin, and what do I think we see? I think we'll see by the end of this year some multiple of companies versus the current amount of publicly traded Bitcoin treasury. Probably in the magnitude of 3 to 5x would be a general prediction of the amount of increase in Bitcoin treasury companies over the next 10 months. I think by 2030, most public companies will own Bitcoin. And I think the reason I have a lot of conviction in that is I think that people still struggle to wrap their minds around how much AI is going to disrupt corporations and how fast it's going to happen. True exponential technological advancements do not work well in how a human mind thinks. And so as that disrupts industries and disrupts workforces and in major ways, I think Bitcoin becomes the winner in that. And I think corporations are going to adopt it in massive amounts. And so these companies that are able to move this year, whether it's 50 companies, 20 companies, I think they're going to be big winners over the long run, big winners. And that's why I call it the year of the Bitcoin treasury company, because I think it's the time that we move from just a couple to many. But those many, I think, are still going to be early versus every single company adopting it. And once every company adopts it, I think they'll still be better off. But in the S&P 500, the 500th company that adopts it, they're not going to be a winner in that. They're going to be a follower, right? And they're going to be doing it out of desperation.
Yeah. And in your client base, what are you seeing currently? Because the narrative has shifted. So I'm wondering if you're getting clients, rather than you driving the message, hey, you should have 3 to 5% in your portfolio, are you getting people knocking on your door saying, hey, when we're putting Bitcoin in my portfolio, can I talk to you about Bitcoin? Or are you seeing that sort of thing yet?
Yeah, we absolutely are. And so this kind of gets into what types of clients does Strive really hit in a major way. And our viewpoint of kind of how we're thinking about the world is we want to be excellent in bringing Bitcoin to the masses of people that love capitalism, that love meritocracy, that love freedom, that may or may not own Bitcoin today, of helping them own it. I think there's already some really great service providers out there for Bitcoiners that may have a massive amount of Bitcoin and they're thinking about estate planning and future planning, and I think there's some pretty good options out there today. Ours is, how do we bring Bitcoin to the masses? And I think the response from clients has been overwhelmingly positive. Of this is interesting. What, I've never had my advisor talk to me about this before. Thank you for bringing this to my attention. I've wondered, or I've already owned it, but I haven't wanted to talk to you guys about it because I thought, whatever. So it has been extremely positive. And think about Strive's customer base and people that love capitalism, freedom, meritocracy. They tend to, I would say, be the 2/3 of America. So call it independents, libertarians, and conservatives, some Democrats, but less of those, that they're also getting introduced to this, for some of them for the first time, when they hear the administration talk about it a lot. And so that also piques their interest. And I think that, to one of the things that Jackson brought up earlier, is how do we, not enough people own it. There's a lot of people that own it, but not enough people own it. How do we bring this to the masses? And that gets into the education conversation, lower allocation, help them understand volatility that they might have seen in their portfolio before. And then ultimately, I think it expands from there, because most people that have a journey around Bitcoin education, the more they educate themselves around it, the more they feel like they are short or don't have an adequate amount of Bitcoin in their portfolio. That's probably most of the listeners of this podcast, right? But how do you educate and introduce in a reasonable way that positions for the long run?
Yeah, love that.
I think of it as the reverse of the Cantillon effect, right? The more people you can put Bitcoin in their hands, the more it kind of spreads what's coming over the next 10 years and kind of equalizes society in a way, in a freedom capitalistic way, rather than in the sort of socialist kind of way. Yeah.
Matt, maybe to wrap up here, I'm just curious, one non-Bitcoin question. What are you paying attention to at Strive or personally outside of this asset class? Is there anything you could speak to just in terms of strategy at the firm or things that you're looking into personally?
Yeah, so probably not surprising, but outside of Bitcoin, actually maybe as far as amount of my time I'm spending thinking about it, I'm thinking about and integrating with AI in a massive way. And it really has been eye-opening to me, just the advancements of AI and what AI could do, how it could improve productivity. My view is it's probably already at the place where it's better than about half of white-collar workers today. I think it's probably a matter of time before it's better than anyone, myself included. And I think that there's different ways you could think about that, but I think not being afraid, but actually integrating that into our workflows, I actually think it's going to be a beautiful thing for society. It's going to cause a lot of disruption and a lot of uncomfortable feelings as we go through a massive amount of change. But from an investment perspective, our view is that three things matter. It's Bitcoin, AI, and it's energy. And so all of those things matter a lot. And countries and corporations that have access to more energy are going to be able to leverage AI more, have more chips to be able to leverage AI more, and then Bitcoin being the savings and the investment vehicle and the most clear winner in that change. But I don't think that you can spend really too much time in AI right now and in a productive manner.
Yeah, we're tapping into it more as an organization, and I've really been enjoying it. So looking forward to doing more of that. Well, great, Matt. I mean, is there anything else that you wanted to touch on that we didn't get to today?
No. I mean, we maybe briefly, we announced a couple days ago our plan to engage with companies beyond Microsoft and help them adopt Bitcoin standard. And I'm excited to announce that we're actually bringing on Ethan Beck. So Ethan was the guy that made the Microsoft proposal and really led that in a very interesting way. Tim, I know he's been on your podcast before, and I was just really impressed with his ability to not only kind of do a 0 to 1 on getting that conversation out there at the corporate level, but then also not just do it for his own benefit. I mean, he was willing to drop the proposal at Microsoft that they took a meeting with Michael Saylor, right? Like he was just, how do I get the win? And our view on engagements, and as we take an engagement strategy, is going to be that. How do we get the win? We're gonna leverage partnerships across the Bitcoin community, across various different networks, to not only just engage with them, but to do it in a way that's collaborative with the ecosystem. And I think as we do that, you'll see a lot of success. And so I'm really excited that you're going to be joining the Strive team in a couple of weeks.
Congratulations. That's exciting.
Yeah, thank you.
That's awesome.
Well, Matt, thanks again for joining. Where would you like people to follow along or get in touch if they want to learn more?
Yeah, give us a follow. Our X page for our company is at Strive Funds. I'm at Cole Macro, and then you can find our website at strive.com.
Awesome, Matt. Thanks so much.
Thanks, guys.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.